University of Mumbai, Mcom Sem 4, Corporate Financial Accounting Question Bank Solution. We are on the topic valuation of business, problem number 6. So, question in problem number 6 is calculate the value of goodwill of business on the basis of an annuity of super profit, taking the present value of annuity of 1 rupee for 5 years at 10% as rupees 3.78. So here we have to calculate the goodwill by taking a present annuity method. Okay, so we just have here we have not given any chart, but directly they have given us the annuity value. Okay, that is rupees 3.78. Okay, net profit of a company after providing for taxation of the past 5 years are 4 lakh, rupees 4,20,000, rupees 4,60,000, rupees 4,50,000 and rupees 4,70,000. So this is a 5-year net profit. So from here we can calculate the average profit by adding all the net total profit given divided by number of years. So we have total 5 years. So here we can calculate, we will get the average profit. So average capital employed is 40 lakhs. So directly they have given is in this sum average capital employed. So here we don't have to do our step number 3. We can directly write average capital employed, the 40 lakhs. Otherwise we have to do the calculation. We have to take all the asset minus all the external liabilities, which is reasonable and on which a reasonable rate of return of 10% is expected. So normal rate of return is 10%. Okay, so this is our second step. NRR is 10%. It is expected that the company will be able to maintain super profit for the next 5 years. Okay, so it is given that the company will able to maintain the super profit for the next 5 years. So we have to calculate the value of a goodwill of a business on the basis of the annual super profit method. So all our 5 steps will remain the same as we have done in our previous problem sums. What are the 6 steps? So these are the 6 steps which you have to remember, because when in the exam you are going to solve the problem, each and every steps will be carrying a marks. It is not only your final answer is right then you will get the mark, but for writing all the step also you will get the marks. So remembering all the step, writing formula, doing the step in a structure form will give you the good marks. Okay, you will able to score good mark. So you have to remember all the format or the structure of solving the problem. So step wise there are 6 steps which you have to remember while calculating the value of goodwill. So what are the 6 steps? Step 1, calculation of future profit, maintainable profit. Second step, calculation of normal profit of normal rate of return. Step 3, calculation of average capital employed. Step number 4, calculation of normal profit. Step 5, calculation of super profit, and step 6 is calculation of goodwill. Okay, so we'll start with the calculation of a future maintainable profit. Okay, so in calculation of future maintainable profit, you have in the sum itself it is given the profit of a last 5 year, and so we have to calculate the average profit. So what is the formula for the average profit? Total profit divided by number of year. So what is your total profit? 4 lakhs plus 4 lakh 20,000 plus 4 lakh 60,000 plus 4 lakh 50,000 plus 4 lakh 70,000 divided by 5. So here you will get 22 lakhs divided by 5. So average profit is 4 lakh 40,000. So average profit, that is your future maintainable profit, FMP, is 4,40,000. So this way you will get your answer for your step number 1, that is calculation of future maintainable profit. You have to take out the average profit, that is average profit equals to total profit number of year. Then your average profit, you will get the average profit, that is your FMP. Okay, next is step number 2, calculation of normal rate of return. So in the sum itself it is given that reasonable rate of return is 10%. So your normal rate of return NRR is 10%. Then calculation of average capital employed. Okay, so in the sum itself they have, in this sum it's very easy because average capital employed is given in the sum itself. You don't have to do any calculation. That means you don't have to add up any asset and then deduct external liabilities. Okay, so these are your steps, 3 step in your problem number 6. Then let's see the step number 4. Now what is the step number 4? Just recollect what is the step number 4. It is calculation of normal profit. Step number 5, calculation of super profit. Step number 6, calculation of goodwill. So what is the formula of a normal profit? That is your step number 3 into step number 2 divided by 100. So average capital employed into NRR divided by 100. So 40 lakhs into 10 divided by 100. So you can calculate on your calculators and you will get the answer 4 lakhs. So normal profit is equal to 4 lakh. Next step is step number 5, calculation of super profit. Super profit is equal to FMP minus normal profit. So FMP is 4,40,000 minus 4 lakh. So answer is rupees 40,000. So for FMP is what? What FMP we have got? 4,40,000 minus normal profit. Your normal profit is 4 lakh. So super profit is your rupees 40,000. Now our last step, that is calculation of goodwill. So previously what you used to do, super profit into number of year of purchase, used to use this formula. But here it is a superannuity method. So by using the superannuity method, or we can use the reference of annuity table. So here we just they have directly given us a value of annuity of 1 rupee for 5 year at 10% as rupees 3.78. So with the reference of annuity table, we have the value, that is rupees 3.78. So super profit is 40,000 into reference to annuity table, that is 3.78, which is given in the problem sum. Directly we have to write here. So 40,000 into 3.78, you will get your answer as rupees 1,51,200. So this is your final answer. The value of a goodwill of business on the basis of annuity of super profit method is rupees 1,51,200. Okay, so in this way, by using all the 6 steps, you are going to solve your problem sum of value of a goodwill. Whenever you have to calculate value of a goodwill, you have to remember all the 6 steps. First step is what? Calculation of FMP. Okay, future maintainable profit. Then our normal rate. Step number 2 is the normal rate of return. Step number 3, you have to calculate average capital employed. Step number 4, calculation of normal profit. Step number 5, calculation of super profit. Step number 6, calculation of goodwill. Okay, so you have got the answer for your problem number 6. Okay, very easy. Only the formula of last step, that is calculation of goodwill, is different here. Rest all problem sum is same as our previous sum. Okay, so for now, for the problem number 7, you have to see our next part. So please subscribe and click on notification bell icon. Thank you.